need to get people outside. We're going to begin. If people could please, from the reception, if people want to come in and well, welcome to everybody. Thank you very much for joining us today. I'm Michael Shifter, as a president of the Inter-American Dialogue, and it's wonderful to see a lot of good friends as well as some new faces here with us today. This event marks the Washington launch of the McKinsey Global Institute's latest report, Latin America's Missing Middle, Rebooting Inclusive Growth. According to the report, Latin America used to be one of the most prosperous emerging regions in the world, but it's now being on the verge of being overtaken by other regions that had been considerably poorer. The bottom 90% in Latin American households consumes just 64% of the total, the lowest share in the world. Today, our discussion will focus on new data that is contained in this report and to explore strategies for reversing these trends, including ways digital and technological advances in the region could help reboot inclusive growth and regain lost ground. Some of the questions we hope to address include: why has growth in Latin America been slower and more volatile than in other emerging economies? And how does the region compare in distributing the gains from economic activity? How has the region's middle class changed in recent years? And how could new approaches help create a larger pool of upwardly mobile consumers? How has the private sector evolved in the region? What can be done to increase the number of mid-sized companies needed to spur competition and innovation? What role could new technologies and the region's tech startup scene play in addressing the region's dual challenge of slow growth and unequal distribution? We're very honored today that the president of the Inter-American Development Bank, Luis Alberto Moreno, has agreed to share some opening remarks. As many of you know, the IDB is a leading source of development financing for Latin America and the Caribbean. Under President Moreno's leadership over the past decade and a half, the IDB has accomplished a remarkable set of achievements. Most recently, the bank's strategy has focused on new ways to address social exclusion and inequality, to address the low productivity and innovation in the region, and to overcome the persistent lack of regional economic integration. I don't think there's anybody better to kick off today's meeting than President Luis Alberto Moreno. President Moreno was first elected president of IDB in 2005 and was reelected in 2010, 2015. Before serving at the IDB, he and I met and worked together very closely when he was Colombia's ambassador to the United States, and really did an extraordinary job that people still talk about as kind of being the model Latin American ambassador here in Washington. Before that, he had served as a minister of economic development in his country, Colombia, and also has vast experience in the private sector as well. He is a very close friend personally, and also a very close, strong supporter of the Inter-American Dialogue, so we're delighted to have him. Before President Moreno will get us started, then we're going to turn after that to Jana Ramos and Kevin Russell of the McKinsey Global Institute for their presentation of the report. This is Jana's second time here at the Dialogue, and we're delighted to have her back. Last year, she participated in a very interesting event we had on smart cities in Latin America. In addition to being a partner and economist at the McKinsey Global Institute in California, she also serves on the board of the Dialogue's Latin American advisor publications. We've all benefited from her insights and comments on a wide range of issues over the past 2 years. And for Kevin, who has been with McKinsey for 4 years now, this is the first time I think you're at the dialogue, and we welcome you and thank you for joining us. And Kevin headed the research team that produced this report. Jana and Kevin will be followed by Eric Parrado, who is the IDB's chief economist and general manager of its research department. He's Chilean. He's a professor of economics and finance at the business school of the Universidad de los Andes in Santiago, Chile, and also has been a visiting professor at the University of Oxford and the Central European University. Eric recently joined the IDB in March of this year, and this is the first time he's at the dialogue, and we are very, very happy to have him. We know that this won't be the last time. We're going to continue to call on you for other kinds of events, Eric, but we're delighted that you were able to join us at this meeting, and thank you for making special arrangements to work it out. Before I turn over the microphone to President Moreno, I want to take a moment to recognize and thank Eric Brand, who is the head of our corporate program. Many of you know, the publisher of our Latin American advisor, who deserves the credit for coordinating this event and working closely with McKinsey and getting our speakers. So thank you very much, Eric. And I also want to thank Elizabeth Leone Rawls and Sophia for also their help for their good work. So please join me in welcoming our good friend, the President of the Inter-American Development Bank, Luis Alberto Moreno.
Working? Okay, great. Mike, thank you very much for that very kind introduction. And it's always a pleasure to be here and to be with a very distinguished group, but more importantly, to see a report that is very critical and is the work that the McKinsey Global Institute has done, not only in this case on our opportunities for our region, but equally what they've been doing in the work on cities, which we actually work together in developing a very interesting methodology in looking what arguably is the most urbanized region of the emerging world. And I'm also happy to be here with my colleague, with Eric Parrado, who you have a chance to hear more from. But at the outset, I'd just like to begin by saying, it's always good to kind of step back. I always think that in Latin America, it's always best to focus on the trend lines and not on the headlines, because the headlines get us very confused some days. So let's just step back for a minute and look at, what happened at the end of the second decade of the 21st century, in which Latin America and the Caribbean, where we're at right now, can look back and see some of the progress that we've made. And I think it's important to understand. We've seen how, for instance, infant mortality has been cut in nearly half, how primary school completion rates have surged to around 90%, how women are increasingly joining the labor force and obtaining college degrees. This is something that Eric, from being his previous life as banking superintendent in Chile, worked a lot on. Inequality has fallen. We're still way back in this regard, and this, in my view, is what has always explained populism, I guess, from the days of Perón to Chavez, because inequality is where you have the main source of populism. And there is a moderate rate of poverty, of how it has dropped now to around 20% on average in our region. To me, the most important factor, and you see it especially when you talk to some of your corporate friends, how the expansion of the middle classes, I'm talking here about Latin American middle classes, and speaking of people who earn more than $10 a day, how that has changed fundamentally consumer markets in Latin America. And I really want to look at this from the perspective of McKinsey. But essentially, one could argue that about a third of the population today in Latin America sits precisely in this area. And these are, of course, middle classes that have tremendous challenges. And as economies go with lower growth, those middle classes have in essentially the risk of falling back. And this, I think, explains some of the political behaviors. The middle class today, as we know it, consumes more and more and is an engine of growth in a region that wasn't really as strong a consumer market as it now is. They also vote more. They are more civically engaged. And I would argue that, and that basically you can see in some of the research that has been done by Latinbarometro, they are more in favor or tend to be more in favor of pro-market reforms, including trade liberalization, and especially across the notion of integration across the Americas.
Market coming from this next segment, and the top 10% accounting for a full 36% of the economy. Now that's higher than any other region in the world, very similar to sub-Saharan Africa. It's a reflection of concentration and inequality, but it also implies that, from the perspective of this, if you're an SME looking for a market, do you have those opportunities? And in fact, if you look at the SME surveys in a lot of these countries, Colombia is a good example, the number one response for why aren't you growing is, in fact, we have a problem with demand. And so there are many other factors that we know about, and we'll talk about those in a minute. But that's something that I think really jumped out at us and is kind of the picture that we wanted to bring it back full circle and say, okay, there's a challenge on the supply side. How do you create more competitive and more mid-sized and large firms? But you also need to make sure that on this demand side, something changes, because people are not going to invest without this picture looking different. So that's just kind of a simple view of this cycle that Jana was talking about. So what does that mean in terms of next steps? This is the picture that Jana pointed out to begin with. There's many things that we could talk about on that supply side. Digital is something new, and it is going to change the picture here. But what's going to matter is, is the workforce ready? Are these marginalized populations participating in the economy from both the perspective of being ready in the workforce, but also in terms of, are they market consumers? And then, of course, there's an enabler piece of it, which comes to governance. And I think there's a lot of appetite, I think, for talking about institutions today, literature that talks about how this economic concentration may have a mirror in politics. I think what we're saying is just really, that at some level there has to be a collaborative effort here. And it's an opportunity for business to see this inclusive growth happen. I think it's a key message of the report. So the kind of transformation that would underwrite a new era of inclusive growth is going to start with the participation of these different actors and different potential beneficiaries. I think the lesson for government is really to be adaptive in that context. So I just want to use digital as an example for this and kind of conclude with that, which Luis mentioned at the beginning is a kind of a critical claim in the report, which is something different is afoot here. We aren't in iron chains when it comes to this cycle. Thank you very much. So what you see here, you mentioned the 10 unicorns in the region. A lot of these companies may be familiar to you, but they're companies that reached $1 billion in valuation. I'll just say that Rappi, this food delivery service in Colombia, which is now ubiquitous there, is also near and dear to our research team's heart, because it's food delivery 24 hours, which if you're on the ground doing research becomes an essential part of your life. But these are companies that are doing good things, and this is a potentially good news story. It's also a source of productivity that is in some ways free from other challenges in terms of integrating with supply chains, global supply chains, that kind of a thing. So a real opportunity here. On the other hand, let's be clear, digital has tendencies that can run against inclusive growth, right? Automation is a risk, concentration of profits that we're talking about in this report. So this critical piece of adaptive government policy, being aware of how do you capture the productivity gains while at the same time making sure that it doesn't worsen that concentration picture that is holding up that virtuous cycle of growth, becomes the main challenge. So an opportunity, a lot of good things happening, we think, and a lot of progress to build on, but a challenge that remains. So I'm going to stop there. Just wanted to share the kind of key facts around it. And thank you very much for having us. We really are looking forward to this as a discussion, as ongoing work, and really, really appreciate it. So let me turn it back over.
Thanks very much, Kevin. Thanks
So I'm going to stop
for that
there.
presentation.
Just wanted to share the kind of
now we
key
going-
facts around it.
Going to turn to Eric for some comments to get the discussion going, and then we'll open it up to you for questions and comments. So, Eric, you have the floor. Welcome.
Okay, no, thank you very much. And this is my first time at the dialogue, so it's an honor and a pleasure to be here and share some ideas regarding growth and inclusion with a focus on income distribution. You know what? I'm gonna stand up. Yeah. And to be inclusive, I'm gonna be in this side of the room. Okay. So, as a way of introduction, I would like to tell you a story about Latin America, but using an example, because I wrote a paper some time ago regarding the San Agustin syndrome of reform procrastination. And the story is the following. Before being a saint, Agustin enjoyed life. He lived a really hedonistic life. He committed all type of sins. He had a lot of fun. But one day, he got a message from God. And he said, okay, I have to convert. I have to embrace God in some way. So he knelt and he prayed to God and said, God, give me chastity and continence, but not yet. And this is the story of Latin America. We know what to do. We know the reforms that we need to do, but we don't have the political courage. We don't have the long-term view to change and make the reforms. So that's why we have to try and avoid, in some way, reform procrastination. So let's take a long-run perspective regarding Latin American and Caribbean growth. So if we start in 1960, take a look what happened with income per capita relative to the US income. In Latin America, 20%. Emerging Asia, 11% relative to the income in the United States. That was 1960. What happened after almost 60 years? Latin America increased to 24%. Look at this, Emerging Asia, 58%. What happened in the middle? Economic growth. In average, Latin America and the Caribbean grew 2.4% per year. You know how much Emerging Asia grew? Almost 5%. So this is the power of compounding. So that's why we are lagging in terms of investments, physical capital, but also in terms of human capital. And those are the main drivers in terms of the lack of economic growth. If you compare net investment rates as a percentage of GDP, look at this in terms of the average of the same period, 12% in the case of Latin America, Emerging Asia, almost 20% as a percentage of GDP. Huge, huge difference. What happened in terms of human capital? If we compare, for instance, primary school and secondary school in terms of reaching a minimum benchmark in terms of math, look at these rates. Of course, very far away from developed countries like the US and other OECD countries, but also far away if we compare with countries with similar GDP per capita. So only 1 in 3 has reached the minimum standard in terms of math in primary, and almost the same, 35%, in secondary school. So we're losing the investment race, and we're also losing the skills race. So it's not a surprise that if we do some growth accounting, total factor productivity is really bad in Latin America, and the contribution of total factor productivity in the case of Latin America and the Caribbean is negative in this period. In contrast, we take a look to emerging Asia, we have a big number in total factor productivity, which is 1.72%. Of course, if we take a look to capital accumulation, education, and labor, they are more or less the same. Of course, there are some methodological differences in terms of the quality of labor or in terms of the quality of investment. Because it's important to say also that investment is not just a matter of quantity, but it's a matter also of quality. And quality in Latin America and the Caribbean has been really bad too. But this is like the bad news. If we take this long-run perspective from 1960 to 2017, what happened if we decompose in business cycles, in long business cycles? We can identify 3 big waves, one from 61 to 83, and the other one from 84 to 99, which has similar economic growth, around 1.8%, 2%. But if we take the 2000s, from 2000 up to 2017, the average rate is around 3.5%, which is pretty good for any standard. In that period, during the 2000, we have this increase in GDP, except of course during the global crisis in 2009. But the good thing is that income inequality at the same time decreased significantly. So here, using the Gini coefficient, which is a measure of inequality, we can see that in 2002, we have 56 points, and then we reach 50 points in 2011. So there is an important negative correlation between income inequality and economic growth. So yes, I'm trying to make the case that economic growth is important for inequality. So now, in terms of what happened with the middle class and poverty, first of all, we can see a decrease in poverty from 45% up to 22, 23% in terms of the population. But at the same time, we have a huge increase in the middle class from 20% up to 35%. So it's an important effect of economic growth that has impacted positively in the middle class and in poverty. This is important because we have to ask, how did inequality decline? And we can decompose household income in 3 main components. First of all, the number of people employed in each household. Second, non-labor income. And third, labor income per worker, wages, which is related to economic growth. And we can see at least 2 conclusions from these pictures. One is that inequality has declined in all countries except in Costa Rica. At least in this sample, we have homogeneous data. And the second conclusion is that labor income was the most important component in the decrease of income inequality. So economic growth matters for the reduction of income inequality. There are some exceptions, like Mexico, where non-labor income is important because they have very good policies in terms of conditional cash transfers. But anyway, the blue bar, which is the labor income per worker, wages, has an important component for the decrease in inequality. If we take a look to some regional differences, take Latin America, South America, and Central America and Mexico, wage inequality has declining, but we can see a very significant impact in South America, more than Central America and Mexico. And why is that? because the terms of trade have been really important for South America and not so important for Central America and Mexico. And that's why when we see changes in domestic demand, they are related more to changes in the terms of trade. What happened in terms of the middle class and poverty? Again, we have significant changes in the composition of the middle class in South America, and not so much in the case of Central America and Mexico. And the same happened with the decrease in poverty rates. It's more effective and more important in the case of South America, given the terms of trade. So, summing up, trying to have my 15 minutes presentation, I think one important message is that we haven't grown so much. The 2000 were an exception. We have a positive income on income inequality, but it seems that it is a one-shot event. So we were lacking in some way, and some countries did some homework, the other countries didn't. So we have to continue looking for sources of economic growth. And that's why our last macroeconomic report at the IDB focuses on infrastructure. I think that's one of the important things to focus, and try to boost, of course, total factor productivity. So with this, we know what to do, so let's do it. Thank you very much.
Thank you very much for those comments, Eric. We appreciate it. And I think there are a lot of issues that have been discussed in the three presentations. And we have roughly about a half hour for any comments and questions and discussions. So I see around this room there are a lot of people with a lot of interest in these issues. So I want to make sure you have opportunity to share your view or to pose a question. So why don't we open it up? There are microphones, so please wait for the microphone and just please tell us who you are and your affiliation, and try to be as brief as you can in your questions. With a lot of interest in these issues, sir. Yeah, please. There's a microphone here. To share your view or to pose a question. So why don't we open it up? There are microphones, so please.
Good afternoon, everyone. How are you? My name is Omawale Prince. I'm a professor at Howard University and also an entrepreneur in Colombia. Two questions. First and foremost, on the education side, you talked about kind of the primary piece, and I know that President Moreno had made the point on the education side, primary and the growth of that, particularly around the private school side. So the first question is, in your research and just kind of what's happening at the IDB, what are you seeing in terms of additional investment in the public education system, since that's where the masses are? And then how is that, how those folks migrating to being prepared for higher ed, which creates those higher paying jobs and those higher paying wage opportunities? First question. Second question is particularly around value added manufacturing. So in the case of Colombia, for example, there's a big program now to substitute coca or cocaine for cacao or chocolate or cocoa beans specifically. They're exporting 85% of those beans right now. What are you seeing on the IDB side? And as part of the work with McKinsey, I'm a former member, Jenna knows, but a former member of McKinsey as well. But what are you seeing in terms of investment specifically in value-added manufacturing? So in cocoa, for example, to go from cocoa beans to cocoa liquor, cocoa paste, and cocoa powder, for example. What are you seeing on the
Great. Thank you very much. Any other questions? Why don't we go to two more questions? Guillermo and
what are you seeing in terms of investment specifically in value-added manufacturing?
Thank you, Michael. Guillermo Reyes with BMW Group. My question is, how much of a challenge is access to credit in the region, and specifically in countries like Mexico or Colombia, to have this middle to thrive and grow?
Great, thanks. And then why don't we finish with you?
Carlos Hasbun from USAID. We totally agree on the digital economy in Latin America as a great opportunity. Which would be the entry point to improve the digital economy and the broad enabling environment for that in Latin America?
Great, thanks. Well, thanks for those great questions, and we'll turn it back to the panel, and then we'll hopefully have another round after they finish. But why don't we turn it to Jen and Kevin, and then Eric after.
Great. Great questions, all of them. So let me start on education. I will leave perhaps the more formal education side to my colleagues, but one thing we often forget is that a lot of the real entrepreneurial education actually comes from apprentice of working someplace else. Think of India's IT sector, for example. It was born largely because of the multinational companies that put their operations there, trained the folks who then started their own businesses. This is what happens in the US in many cases. People learn a trade and they go and work someplace else. The missing middle of companies also means missing opportunities for apprenticeship and talent building and investment for growth. So that for me is one thing we should really think about it. We need more of that. Couldn't agree more on manufacturing. I think food processing is actually one of the few industries where globally you still see number of manufacturing jobs increasing. It is one where even in the US we are seeing jobs not be dropping as fast as they are in most others. So I think it is definitely an opportunity, and I think Colombia is very well positioned, as well as many other Latin American countries, on continuing to do that. I think we have companies that are already doing it, some of the big companies on that space. Access to credit, huge topic, especially in Mexico. It is striking that Mexico has by far the lowest bank credit relative to GDP of any country of its same income level. It is the share of bank credit to GDP is at the level of, I think it was basically countries with a third of its income level. So, and that is the money that mostly pays for new investments for small and medium-sized businesses. So it's a real constraint. It is not a constraint for the large companies who have access to, frankly, Wall Street at very competitive rates. So it's one of the reasons for the tale of two Mexicos very much, which is and the missing middle. On the digital economy, I think why don't I leave that mostly to Kevin? But I will talk about particularly on the company side. But I will point one thing, which is in new technologies, the role of government often matters a great deal in terms of just being an early customer, being someone who sets the regulation and creates the opportunities for that. I think there are real opportunities for the region to step in and do something. And for me, it is particularly important for talking about digital in this region is that Latin America missed the last wave of technological change. The hardware, computer, PC industry in the, let's say, right after 2000, it basically moved to Asia. And that's where the global networks are right now. And the region missed out. Let's not have this wave of technology miss the region.
Sure, I'll just add one comment on the digital question. So I think you asked about the entry point, and one of the things that really struck me, at least in speaking in Colombia, the example with the businesses there, with Andy and these organizations that are really kind of looking at where productivity is going to come from, and their push is really, make broadband accessible to the whole country as a very basic starting point. It feeds into our argument about the demand side as well. If you're going to have, digital retailers and digital finance as two of these big enablers that really have an inclusion aspect to it, but also a kind of market expanding aspect to it, then that's a critical place to start. I think the other, cybersecurity, data, digital privacy, become big issues, especially again when you're talking about inclusion, and the rights that go with that. And those are all kind of government regulatory pieces. For businesses, it starts with, what are your use cases? But I think the big challenge will again be the talent. How do you create the skills that will work, and also for SMEs in particular, are they going to be pushed out with digital giants, or are they going to become part of that ecosystem? And talent is a key part of that.
Thanks, Eric.
Let me take a couple of questions. In my previous life, I used to be the chairman of the Banking Regulatory Agency, so I'm going to talk a little bit about access to credit. Because sometimes as a regulator, you have the mixed feelings in terms of that you're running a different race. For instance, if you compare with an entrepreneur or a startup. So on the one hand, you're running like the marathon race, which is a little bit boring, very long, and the entrepreneur is running like 100 meters. So, and having said that, what we tried to do during these 4 years of tenure was trying to merge. There's a duck here. Trying to merge the idea of that innovation should be supported in some way with regulation. And regarding access to credit, I think it's important not only to use the banking system, but also to use fintech companies. So that's why we try to promote a new law regarding crowdfunding and peer-to-peer lending. Because in Chile, for instance, it's illegal to accept deposits from people, from the retail sector or from companies if you're not a bank. So it's very, very cumbersome for an entrepreneur to set up a new fintech using crowdfunding systems or peer-to-peer lending. So at the same time, where you have to cover solvency issues and try to have a stable system, at the same time, we try to push forward this law regarding fintech. I think that's important to have more access to credit, of course, with all the safeguards that you need to have in the system. Regarding the digital economy, and it's related to the previous point, is that, for instance, we promoted the use of the cloud. And I think that was a really important development for the financial sector because it's much cheaper than using regular storage. And that was a really good discussion, and not with banks, but with technological companies. So it was a really important discussion because we learned a lot how to use the cloud, and now we're promoting that. But of course, we have to be really careful about cybersecurity issues because we have a couple of issues in Latin America. We have a couple of issues in Chile, so we have to be really careful on that. Regarding manufacturing, the manufacturing question, I think very important, diversification. This is a message that we know what to do, but we haven't done so. We still, in Chile, export copper, but we are not exporting cables. And the same thing with lithium. We should export now batteries, and we're not doing so. So I think it's a matter of, trust between the private sector and the public sector. Because if you need to, to build a road to somewhere, probably there is a role for the state, and there is a role also for the private sector to build a hotel somewhere. And I think we need that. We need this national consensus. We need some political courage to think long term.
Great. Thank you. Why don't we take another round? Yes, start with you. Over there. Yes, please. And there is a role also for the private sector. Wait for the microphone.
Yes. Please, to which extent do you think that
tell everybody who you are?
Luis Alberto Salgado, I'm a human rights lawyer. I'm Peruvian.
Thank you.
Thank you, Michael.
Yes.
Please, to which extent do you think, all three of you, do you think that corruption has influenced, and I include corruption, also drug traffickers, corrupted governments, that corruption has influenced this negative balance so far with Latin America. And in your answer, please consider that corrupted governments and corrupted enterprises do not like technological advances or regulatory systems to be improved because they don't want transparency. And the political courage that you mentioned twice already, my friend Parado, has something to do with this lack of stimulus from the core of the government and from the core of the enterprise system, which are corrupted. Has something to do with political courage, that or not? Thank you.
Thank you. Come on. Right here, the front row.
Has something to do with this lack of...
Thank you. Andrew Redman with Monarch Global Strategies. I was wondering if, in addition to looking at education and training opportunities, whether you looked at all into questions surrounding healthcare and access to care and protection against catastrophic illness, which as you alluded to the fact of some people are just barely over the poverty line, and a catastrophic illness can obviously push people right back under.
Thank you. Could take a couple other questions there, and then we'll come here.
Thank you. My name's Javier Arguello. I'm with COGEX. I'd like to make two brief statements that, in my opinion, are more likely to lead St. Augustine to a brothel than to church in the next 60 years. In other words, I think it's worse going forward than looking back. One is, you mentioned in education, in TIMSS and PISA, only 1 out of 3 in Latin America are performing at the minimum level. I would say that even if there's a miraculous transformation in the educational system, even if that happens, we're still preparing a labor force that would be competitive in the Industrial Revolution of 200 years ago. They would not be ready to compete in today's and tomorrow's economy that's innovated by artificial intelligence and is automating the jobs that Latin America competes in. So even if we had miraculous growth in education, we would still fail. So that's thesis one. And thesis two is the positive correlation that we have in terms of concentration of power, inequality, exclusive and extractive economic industries that lead to greater inequality, and concentration of political power that prevents democracies from being economic democracies that provide opportunities to all, which are pretty entrenched forces in Latin America, I think, that are more likely to paint a bleaker picture than a positive one, if that makes any sense.
Anybody have a pessimistic view? Or why don't we go back and then we'll do another round, Luis. But why don't we go back to Jana again and.
So let me take the first and the last comment first, which is the corruption and the inequality and concentration. I actually do think that in levels of corruption, there is no country that can really throw the first stone. It's very hard to do that. I don't think Latin America in terms of just level of corruption is necessarily worse than other places. The truth is that companies who operate there, they often can manage part of that. I'm thinking about, for example, a producer of goods in Mexico who is transporting them to the U.S. and knows that there is a higher risk of being robbed on the road. They account for that as a 5% increase on their transportation cost for security. So I'm not saying there is not a problem in the region, and it is more household and individual and personal risk than it is, I think, an economic risk compared to other regions. I'm not saying it's not a problem. It is, but I don't think it explains the lack of economic growth. I think it has more to do with the fact that it is just, the concentration point is that we don't have enough people participating in that economic dynamism. So you actually are able to create more opportunities for broader base of folks. And I think partly I would say, I don't know if it's corruption, but it is the informality, the incentives, the regulatory structure is such that it makes it harder for many of the people to enter into that one. So that's just my view. But on the two others, on the labor force and education, I tend to agree in that education in itself is seldom a binding constraint because most companies are able to provide a lot of training on their own. And for example, one of the examples our classic example, the world's most productive construction workers are actually Mexican immigrants, many of them who are not fluent in English, working in Texas in prefab house building, which is extremely productive business system. And I think they are trained to do that. They are very specialized and they can become very, very good at what they do without the formal education. So I think there is a balance between the two. And I think I come from Finland. I don't believe in anything more than investing on education, but it is a long-term proposal. We can't wait for that. We need to do other things too. And last on healthcare, we have not looked at that. However, I'm just starting a big project. It's an area we at the McKinsey Global Institute haven't looked at in over about 10 years. We are going to be really re-engaging and reinvesting on healthcare. So let's talk in 12 months or so.
Thank you. Kevin, you want to add anything?
I just had one point on the corruption point. I think one thing that came up quite a bit when we were talking with people about this report is the missing middle of the middle class clearly has there are a certain type of constituency that may have more to lose from what you're talking about than other constituencies. And so, we're focused on the economics of productivity and growth and creating those jobs, but there could be another positive reinforcing loop there, which is you have a middle class that's, makes it easier for officials to, kind of stand up against corruption or in some way, not have to fight it alone. I mean, if that becomes a central issue with a lot of weight behind it. But we're focused more on how do you get that economic development in place that could then perhaps have that effect.
Thanks. Eric?
Okay. Regarding the corruption question, I think there is an absolute relationship between corruption and the lack of economic growth. So, and we have to deal with that, and we have to try to fight that. And we have several examples within Latin American and the Caribbean. So I think it's an important factor to tackle in some way or another. Of course, political courage is important. Of course, financing of elections, it's important. Concentration also in terms of natural resources, companies, and so on. There are a lot of work, for instance, from the Natural Resource Governance Index to be more transparent. And I think all the initiatives to improve transparency are key. One of the issues that, as a research department at the ADB, we're trying to tackle is regarding also investments, sustainable investments. So we're trying to think about this certification of ESG investments. ESG means environment, social, and governance, and try to invest only in companies that behave well in terms of the impact on environment, the impact on social issues, and also the impact on governance. I think it's important, and governance, of course, is related to corruption. Regarding the healthcare question, very important, because our measure of middle class means if you have a negative shock, you can support it in some way, not only in terms of being employed, but also in terms of a health shock in some way. So I think insurance systems are important. And in Chile, for instance, we have a very strong debate regarding the private system versus the public system. And I think this discussion, we have it everywhere, including the US. And I'm with you regarding the negative view on education. I think we have to change things, how to learn. For instance, one of the ideas that are being around is like you have to do homework in the school and you have to learn at home. So probably we can change that.
Why don't we go to final round, Luis? And we'll
Thanks. My name is Luis Porto. I'm strategic counselor at the Organization of American States. We know what to do, but do we know how to do it? I mean, it seems that there is a case for statu quo. Your examples about diversification in Chile. There is a case for diversification, but it might be a case for statu quo. So that's my question. What are your views about the case for statu quo? Why we don't do what we want, what we know we have to do?
Thank you.
Thank you. Latin American, Álvaro Altamirano from IDB Labor Markets Division. We are aging very fast, actually faster than any other region. So my question is, how do we prepare governments for the future fiscal and health burdens, on pensions and fiscal burdens on health and pensions, and how do we prepare citizens for the future of tomorrow, an age society without these new skills and capabilities the world is demanding?
Thank you. You had a question there, please.
Burdens on health and pensions, and how do we prepare citizens?
Hello, my name is Maria. I'm from the IDB as well. Thank you so much for the interesting presentation. My question was for you. I want to know your views about why is the reason for the lack of global competitive firms in Latin America. We did a research last year about productivity, and we found that more than the lack of global firms is the spread of small firms and the policies that governments explicitly promote to create firms or promote entrepreneurship in the region, that they are making firms stay small. And I want to share your views how these policies, maybe they are well intended, but they are keeping firms from growing. And those policies are maybe low-hanging fruits that have better short-term results than investment in education and in health. That is, of course, very important, but it's a long shot.
Thank you. Yes. Here? Yes.
Good afternoon. My name is David Jesse. I'm retired from USAID. My question is, in your research, can you identify 3 countries that stand out with respect to expanding demand? can you identify 3 countries that stand out with respect to expanding supply? In other words, seeing a growth of small businesses, and in the other case of research, of working against the marginalizations of the bottom 19% of the population.
Thank you. Here, and then we'll end with one final comment.
Thanks. Alejandra, MPA at Columbia University. I wonder if you can expand a bit on actionable recommendations, especially models or solutions that we've seen in other regions that may apply in like fintech, digital, perhaps even like what's working well in supporting small and growing businesses, entrepreneurs in other parts, and that could be applicable in the context of Latin America and especially in Colombia.
Thank you. Final question, Ambassador Misto.
Regions that may apply in like fintech, digital, perhaps even like.
Thank you. Great presentation. Would you say that reform procrastination has been perhaps enabled by Latin American universities across the board simply not addressing how modern day universities in developed and developing countries address growth and the private sector and attracting capital and training people, training companies to invest?
Thank you. Why don't we turn to, you want to start off and then we'll end with Jenna. Eric, why don't you take any of the questions and.
So let me start.
The private sector. Attracting capital and training people.
I knew it that
training
you're going to have
companies to invest.
that type of question. So when we talk about sources of growth, we can grow with 3 factors: capital, labor, and productivity. That's it. So it's a simple word, but you can do that. So what we know is here in terms of we are trying to find out best practices, counterfactual examples, like taking a look to emerging Asia. Here I'm showing a couple of flagship reports from the IDB in terms of infrastructure, spending, saving, taxes, housing, debt on the capital side. That's why infrastructure today is an issue for us. Also, in terms of labor, we have some question regarding education, and we're focusing, for instance, in early years. I think the first 5 years are key for education purposes, the quality of life, inclusion, and good jobs. And also in terms of total factor productivity, issues regarding to integration, productive development, new technologies, and productivity. So we have like the list of what we can do. And if we do a counterfactual exercise, for instance, just saying, okay, what would happen if we invest like in emerging Asia countries? Take a look to that. It's impressive. So if we invest like in emerging Asia, we double our GDP. If we invest efficiently like in Asia, we also double our GDP. And if we invest in Asia, like in Asia, both in terms of quantity and in terms of efficiency, look at this. We can go 5 times, almost 6 times in terms of GDP growth. So we have a couple of counterfactuals, we have best practices, and we have some literature to say, okay, education is important, investment is important, and so on. This is one thing. Another issue is regarding the role of the universities, the role of the private sector. And I think I agree with you in terms that I think researchers have to think, and that's also my role at the research department at the IDB, that we have to combine in a better way the policy work with research. And we have to have impact on private companies. We have to train people and trying to get the idea that we need to innovate in some way to promote growth. That's also my role at the research department.
Anna and Kevin, give you the final word.
Well, I'll take a few of those questions. And so let me start with your question, which I thought was really interesting one about why aren't there more mid-sized and small companies? Obviously, it is a hard question to answer because there's so many factors. But my personal view, and in full disclosure, I'm married to a historian, so I tend to have a historical perspective. But Latin America's rapid urbanization and industrialization happened at the time when the region really embraced the import substitution policies. You basically had high tariffs that protected local production. Often those were multinationals, and they provided a real umbrella and protection because you had licenses. There were only so many people that could compete. In many cases, that actually led to subscale production locally because you really didn't need to be globally competitive, and it didn't lead into the kind of export incentives because of the fact that your local markets were really fairly profitable. So when you look at, and we did that a few years back, we looked at multinational company headquarters and large company headquarters around the globe. And what was striking in Latin America is that the region has much fewer over $1 billion revenue companies, the same finding as we had here, but at the very top, and relatively more multinationals. But oftentimes those multinationals, that was not the hub for their global production. So it was basically just serving the local market. And I think that legacy effect, most of those policies have changed since then. That was, I mean, those studies changing very rapidly, I think, in the late 80s and 1990s. Yet, when you have a very large company that already has many of the advantages and has the capacity to invest, it's harder to compete with them. So I think there is kind of the historical factor that makes it tougher for the region to do that than when you are starting, for example, where you have more companies that are competing. Also, some of the advantages of the Asian countries right now is that they have watched what happened to Latin America. So China's economic development policy is just the opposite, which is basically they make regions and companies compete against one another. There is a proof point of whoever is successful is going to get the support at the end of it. So in a way, by the time they become large, they have already had to fight really hard to get there. So I think that is my perhaps a little too long answer to that. Very quickly on aging, I don't know exactly what factor you are looking at. I think Latin America is actually very fortunate in its population demographic growth, which is changing very rapidly in direction, but it traditionally still has momentum for 10 years or depending a little bit on the country, even further than that. So it's much faster in places like China where we are basically hitting a wall much earlier on that. But I think the answers that we have heard from Eric are exactly the right one. We just need to make sure we have a young labor force that has the talent and the productivity to be productive for the long term. And to your question about what to do, I think I am actually quite excited about the fintech companies. I think Eric mentioned that, and to I think the earlier question, someone about financing. I think there are real opportunities for someone to make a big difference, and many of those things are already happening in Latin America. I mean, you look at clusters, you see entrepreneurs in different parts. So I'm keeping my fingers crossed.
Thanks. Kevin, you want to add anything to that?
Just two quick ones, because I don't think your question was addressed. So one is, around the countries that have succeeded. One thing I think, the way I would phrase, if I can take the liberty of rephrasing your question towards what we think about it as, is what are the three countries that kept supply and demand in balance as they were growing in emerging markets, and what are the three countries, that let them get out of balance? So in the latter case, what we were emphasizing is Latin American countries where, in Brazil, they, like I said, really absorbed the commodity shock well, in the sense of it timed well with the social policies that they could keep those in balance as long as the kind of faucet was turned on from the productivity, but getting out of balance when that came down. And so our argument is that you could find a few of those in Latin America. Now, which ones got them right? We use a lot of the Asian countries as benchmarks, mainly because they grew fast and they were emerging markets. I think on your question, what stands out there is the integration and spillover of an ecosystem around their supply chains and their export-oriented growth, which is, created, follow-on service sector growth along with it, which is, step one in that cycle of then, do those demand policies stay in lockstep. On the other hand, I will say that they're starting from a much lower position, or were. They're actually catching up with Latin America, not yet, they weren't at the same point going forward. So the question is, for countries that are at the level of growth that Latin America is, who have already kind of exhausted some of those options, that are facing the, post, premature deindustrialization, what is the supply and demand match? And then, the best examples probably are, the countries that are further along in development. I mean, you can even think of the U.S.'s transition from very high inequality to a period where it went down. largely because those two things were very much in sync. That may not be a perfect answer, but I think part of the problem is what really is the right comparison. And then just on the what can we do, just to add one more piece to that, I think Colombia is a perfect example where, you need to do a lot of things, right? You had the example of build a road and add a hotel. If you look at Colombia, you can have agriculture that can expand on its supply chain. You have tourism possibilities that are way underdeveloped. That is a set of investments there. You have manufacturing possibilities that have the U.S. market readily available. What are the structural costs that need to come down, to enable that? But also just get down to business. Here's the 10 things that need to be done. It's not hard to come up with a list of those things, but you need to bring the business community and the government together to take action, I think, which reinforces the, let's do it.
Okay, let's do it. We've reached the end of our time. Thank you, Kevin. Thank you, Jenna. Congratulations on an excellent report. Eric, it's great to have you with us at the dialogue. We're going to be inviting you to more and more events, so be prepared for that. And thank you for your excellent comments. I think this has been a very interesting, wide-ranging conversation. Excellent questions from all of you, which really, I think, were terrific and thought-provoking. So thank you all for coming, and please join me in thanking our excellent speakers today. Thank you for your excellent comments. I think this has been a very interesting, wide-ranging conversation. Excellent questions.